Our outlook for this year at the beginning was Asia was sailing into a storm because we saw a lot of risks. We thought China growth was going to slow down. We were worried about President Trump really pushing the protectionist button. We thought there would be more faster rate hikes among the big central banks. And Asia was very exposed to that because of its high leverage. And there was a lot of geopolitical risks. But the reality is those risks to Asia haven't really come to hit Asia as much as we thought. And we've actually had a big export recovery led by electronics in China. And China's done a remarkable job in stabilizing its economy. China has been transforming and rebalancing from investment-led growth to consumption-led growth. That's actually been happening this year.
When we look at the last 12 months data, it just so happens that China's total social retail sales was just under 5.2 trillion, vis-a-vis US about 5.6 trillion. It's foreseeable in the next 12 to 15 months, China could be just as big or slightly bigger than the US in terms of retail sales.
And I think the other thing is inflation stayed very low. So central banks in Asia have kept their interest rates low. In fact, India and Indonesia have cut rates even further. And fiscal policies across most of Asia has been expansionary. So it's been a pretty growth positive environment for Asia this year.
One thing that China should definitely do, depending on the Japan lessons during the burst of asset price bubble, will be as early as possible recognition of the magnitude of the issue itself.
I think for Beijing to avoid a repeat of the Japanese bubble in the 1990s, we are starting to see a more focused approach. So one thing that Beijing is clearly doing is stepping up financial supervision and regulation.
So China's policy causing some sort of asset bubbles in the real estate market in particular, the Japanese investors see that as the mirror image of the 80s in Japan, and also afraid as a major risk to the global financial markets. Having said that the China's property market or financial market in general are relatively isolated from the global financial market. So we don't really believe even the bubble pops in China, that there's going to be an immediate contagion effect on the other.
I think the other big theme that we've been pushing over a year now that we still have high conviction on is this distinction between Asia's tigers, aging tigers if you like, which are the Northeast Asian countries like Japan, Korea, Taiwan, Hong Kong, China, and Asia's youthful cubs, tiger cubs, like India, Indonesia, Philippines, Malaysia. And we're drawing a growing distinction here where we feel in terms of the growth outlook and the ability to unlock full potential growth and allowing these economies to grow at even faster rates in the coming years, that opportunity is much bigger for the Asian cubs, so the Southeast Asian countries and India, partly because of the demographics, they have very young populations, partly because they still have a lot of room for developing. They have lower income per capita, so there's a lot of urbanization ahead, and also partly because the governments are getting on with reforms that are going to help improve productivity. Well, as we look into next year, I still think there's a lot of, to use the same analogy, a lot of swells in the ocean that Asia is going to have to navigate. I think it's still likely that the big central banks are going to be normalizing policy, and Asia does have quite high debt levels, so that's one vulnerability. I think in terms of China, it is going to be biting the bullet on reforms, and that can be painful for growth in the short term. And then US protectionism. I don't think it's completely gone. I think it's in the shadows and it could come back, and Asia is quite exposed to that. So there are risks that Asia still faces, but I'd say compared to 12 months ago, those risks don't look as severe right now.